I'm just telling you about it because I think it's something that could change the nature of gold pricing and silver pricing quite significantly. And if you haven't bought gold or silver by today, and they do announce this gold revaluation tomorrow, you probably won't be able to buy gold below 5,000 or silver below 100 ever again. And why do I say that? Well, because if they were to revalue the statutory price of gold that is held by, it's held by the U.S. Treasury to 4,000, let's say $222.22. I know that price sounds weird, but right now the statutory price is $42.22. And that was the price they revalued to back in 1973. That's the last time they revalued the statutory price. And it's been there ever since. Prior to 73, the previous time was 72. They revalued from 35 to 38. And prior to the 35 price, they had revalued it in 1934 from $20.67. And prior to that, it was 1834. I think they revalued from $19.37 to $20.67. So this is not done very often. So does it really matter that the Treasury values the gold that it supposedly has? And I say that because there hasn't been an audit since 1953. But I don't think the markets would care if there's an audit or not. Yes, us rabid gold bugs and sound money proponents would like an audit, but I think the world would accept this, and most of the world accepts now that America has 261.5 million troy ounces. And of course, that gold was eventually, that gold was originally taken in from the American people in 1933, the gold confiscation, and it was taken in by the Federal Reserve banks, and that's why the Treasury had to issue gold certificates to the Federal Reserve, and these gold certificates are also on the Fed's balance sheet, and they're held at $42.22. And if you do the calculation, 261.5 million times 42.22, that comes up to 11 billion. So it's not much, 11 billion in the scheme of things. But if they were to revalue the price of gold to market, let's say, or to this 4,222.22, which would be convenient. It's like 100 times reset. And I know today will be a quiet day in the markets. I think, the Treasury market, the stock markets are closed, but futures are going to keep trading. So it wouldn't be a price that's too outlandish, 4,222.22. And as I said, that would serve as a floor going forward. Gold would never go back below that price, just like it never went back below 42.22, 38, or 35. So what would happen to the Treasury's balance sheet? Well, they would get a windfall of $1.09 trillion because that's the difference from 4,222.22 to 42.22. So yeah, President Trump could announce tomorrow this gold revaluation, but how would the process actually happen? Well, Congress would probably need to amend the relevant provisions of U.S. law that specify the statutory value of Treasury gold. Alternatively, Congress could authorize the Treasury Secretary to establish a new statutory valuation. So these would likely be the steps. Congress passes legislation changing the statutory price. Treasury officially revalues the gold certificates held by the Federal Reserve. The Federal Reserve's balance sheet changes. Treasury owns the gold. Federal Reserve owns gold certificates valued at 42.22. If the certificates were revalued to 4,222.22, the Fed would owe the Treasury approximately another trillion in newly created reserve balances. What's the next step? Well, Treasury receives just over $1 trillion in deposits at the Federal Reserve. The Treasury has an account at the Federal Reserve. President Trump posted an image or a photo the other day of a massive gold eagle stuck to the White House. He's talked a lot about the new golden age. We know he likes gold. I saw a clip of his granddaughter in the Oval Office and Kai Trump, and she joked. She said, "My granddad hates gold," and she said, "I'm joking." Yeah, there's a lot of hints, but it doesn't mean that they will do it. But if they were to do it, knowing President Trump, how he likes show business and he likes big events, this would be the last chance to do it before the elections. The 250th anniversary. And what are the other clues out there that we've spoken about here on the channel? Well, there are all these bets on the gold price being at 10, 15, or 20,000 by the end of the year. Huge bets on the options market on COMEX. There's also the U.S. Mint minting these gold and silver bell coins that are priced at the gold's priced at 19,600 per troy ounce and the silver's priced at $1,500 per troy ounce. Is this just because it's going to be collectible? There's only 2,026 of each being sold, or do they know something we don't? And these, of course, are only going to be available from the mint from the 16th of July.
They would have to revalue gold to $30,000 or $40,000 an ounce to make a really big difference in the debt. And of course, if that happened, it would, the price, we'd see sky high inflation. And whether or not they're going to do it, I don't know. Nobody knows. They're talking about a 50-year bond repayable in gold on July the 4th. And I see China stopping gold trading on the SGE for, if you're trading paper products or whatever. That's happening on July 24th. But the big thing is the call options for $20,000 call options in December. That's $10,000, $15,000, and $20,000 call options. There's tens of millions of dollars bet in December that we're going to see gold price that, a 5-digit gold price of some kind. Wow. And that's what I'm really watching, because somebody's, there's been investors in there just snapping those things up. I remember back in February, when I first heard about it, there was up to 20,000 call options in December for December gold, and now it's up to over 30,000. So there's some serious money being bet that we're going to see a fantastically higher gold price before the end of the year. And, the powers that be are trying to hide it. But, let's face it, this currency system that we live in, this paper monetary currency system we've lived in for the last 50 plus years, is about to come to an end. I remember when Nixon got on Bonanza, came on in the middle of Bonanza on Sunday night and said, we're temporarily closing the gold window. Well, here we are 50 some years later, and the chickens are all coming home to roost in the fiat currency system. And how they get out of this, I don't know. But I can tell you for sure that it's going to result in a fantastically higher gold price than we have today. Let's take a look at this thing from the 30,000 foot level. We are living in the biggest financial and paper bubble the world has ever known. It far exceeds 1929, the tulip mania and the subsea bubble and the whole 9 yards. We have never been in anything like this before. So everything you see out there, like I said before, is just a total fantasy. Any number you look at on your computer screen today, is whether it be the stocks or the bonds or the value of the currencies or gold or silver prices. You look at this and you wonder what you wonder what you should invest in and why things are acting the way they are, and it's because everything's being managed. This has been going on now since Nixon took us off the gold standard, took the gold exchange standard back in '71. And we've been living in this paper fantasy world ever since, where the central banks of the world have been printing money hand over fist, and everybody knows what the dollar index or the currency charts look like. It's parabolic from upper left to, from lower left to upper right and heading to the moon. This can only last so long before the entire system blows up. So, you look around and you say, what should you invest in? Well, you can either be out of the market entirely, or you can be invested in the two hard asset commodities that have been money through all of recorded history, silver and gold. And everybody listening to this podcast knows that they're invested heavily in this sector. And when the smoke clears, the only thing that'll be left standing are the two reserve assets that nobody can run off on a printing press. Well, like I said, the commercial traders have been pounding away trying to cover as many shorts as they can. They've reached the bottom now. They have been able to improve their position now for the last month or so. So unless the longs are prepared to sell or go short, the price can't go any lower. I don't care how hard they try. So if I had to bet a proverbial $10, I'd be happy to put it on the table and see we've seen the lows for this move down. And how high the rally goes from here, which will inevitably begin